Okay, it's 28th September. This is strategic to tactical. Going to do the tactical, the market index tactical update for the week. So last week was a pretty interesting week. Came off the all-time highs after the Baba IPO, and the market pretty much got beat up. Had a pretty good reversal day on Wednesday, and then gave it all back then some Thursday, and then had a bit of a bounce back on Friday. So but all in all, we're definitely in a tactical bearish environment. The sellers definitely have control even after Friday's little up bounce. So this is the S&P right here. You can see all week pretty much the trend is lower. That being said, still haven't broken below 50% of the summer's lows to the highs on the 19th of September. So obviously strategically we're still in a bull market, no question about it. But sellers definitely got some control yesterday and or last week, and we'll see how, the key here is going to be how tomorrow, what happens tomorrow. If the bearishness continues, we will not break Friday's high. That's your first line resistance around 1986 in the cash. If the bears really have control, they'll actually open it lower, just like they did on Thursday, and then just never look back, and then go down here. Next level is obviously the lows on Thursday, Friday. If they break that next level, you can look at the 50% retracement level, which is 1960 roughly. Then you also have the 100-day down here at around 1950 and change. So that would be your next level support if we do open lower, or they actually take it down, breaking the lows of last week. Yeah, so we'll see what happens. But either way, there's some potentially good shorts, and I'll go over those in the tactical setups. But I'm not going to say that we can't take out Friday's high and then actually negate a good portion of this. Obviously, the bears definitely don't want to see Friday's high get taken out, and that will sort of be the line in the sand, I think, that would negate this latest down moves, is if they do take out Wednesday's high at some point, and then and able to close above it, and then that would potentially allow the market to switch gears back to the long side. But I don't know, I have my doubts on that happening, but again, I try not to trade my gut instinct, which is many times wrong. Let's try to trade the way the market shows, and again, the bears are in charge until the bulls can prove they can hold a higher, at least put two updates together, so again, we'll see. I sort of have a sneaking suspicion if we have the bear case tomorrow, that we open lower exactly what we did on Thursday, and then just flush it down low, to the next level. So if we open down at just a couple handles, nothing crazy, then there's also a chance to go from red to green and then break Friday's high. But if we're down more than, say, 5 handles in the SPOOs, I have my doubts that they'll, I think the sellers will come right back out and try to flush this lower. So we'll see how the morning develops tomorrow. One other thing here to highlight is the McClellan oscillator, which is definitely in the a little bit of oversold territory. So, risk reward, sure, I'd like to see the market, but buying the dips has been the way to go, and it would be a nicer trade, I guess. But again, we'll see how tomorrow goes. But on the McClellan, if they do, if they're able to break this little downtrend here, that might start showing a little bit of underlying strength in the market, even if we do sort of go sideways or whatever, and then maybe we do get a bounce. If we don't get it tomorrow, maybe Tuesday. Again, we'll play it as we see it and see how that goes. Let's go through the Nasdaq. I actually do have a bit of a tactical market extreme indicator. It indicated twice last week. One was Wednesday, which didn't have any, it had no follow through, so kind of that negated it, and then we had it again on basically Friday's bounce, which is, we'll see if they can put some two updates together and basically tell us to look for some relatively strong stocks. Again, 50% actually went right to the 50% level in the Nasdaq from Friday, the summer's low to the high at the BABA IPO. So we did hit the 50% level and bounced off of it. And again, we'll see how that works out tomorrow and into the early part of the week. So again, the McClellan oscillator has the same type of setup here. If it does pop higher, maybe that does show some underlying strength in the market, and maybe we'll follow through with the index. But on the Nasdaq, definitely want to look for more long setups versus short setups. So we'll see how that goes tomorrow. Just want to show you the Russell, because this is the one that's been lagging, the one that's all the bears have been hanging their hat on. Okay, we broke. We definitely had a pretty rough week, but these lows are still holding up. And this is in the ETF. They were on 109. It's definitely that support kind of bounced off it. So we'll see if that that support holds. But right now we're definitely in a couple week down move, and until the bulls can sort of break that trend, it is what it is. We're been heading lower here. So they have a lot to prove. The bulls have lots to prove, at least in the small cap space. Again, where I think the problems have really been here, this is a junk index. The high yield has definitely been having some issues, and that I think has been the wind in the face of the market. Definitely some dislocations going on. Again, in the bond space, the whole Bill Gross thing came out on Friday morning. I think that might have been what spooked the market on Thursday. Obviously, the news was out. For all the people to know about Bill Gross Thursday, and that probably was potentially what helped sellers come in and beat the market down. He's a superstar, or has been a superstar, and been having a rough time as of late. And again, it may be one of those things. It's like when who is it? The big hedge fund, that guy who was the value guy, at the height of the internet bubble. Anyway. When he sort of closed his shop right at the height of the market, because of the internet bubble, because he couldn't compete, and nobody wanted to be buying value. Everybody was looking for internet.coms and this, that, and the other, and he basically quit when and that was basically the top of the market. So who knows? Maybe this is the top in the the whole bond complex potentially. I guess that's sort of, I think, the feel anyway right now, and that's probably what definitely helped beat up the market a little bit on that, had that bad Thursday. But again, this is something that I've been watching, and we've definitely been in this down. This is really going to get beat up pretty hard, and until this changes, I think. Sure, the market can go higher, but I think this is again sort of just the wind in the face of the market going higher. So again, we'll see how things go, and we'll see how the week plays out. So again, I think if we're only down 2 handles, maybe unchanged, I think we have a good chance of the market maybe trying to put 2 up days together. If we come in down more than that, I think it'll be tough. I think there may be more sellers coming out of the woodwork and try to beat this to another level lower. There's a lot of I think there's a lot of pros that would really like to see the market go lower. Either lower level to buy or just there's been a lot of frustration, I think, on the in the all around in the last couple months, and so again we'll see how the market opens tomorrow, and we'll play it accordingly. And I will go over setups in my tactical setup video.